Hello everyone, my name is Salim and welcome to the Markets Breakdown Analysis for Tuesday, the 31st of October 2023. We'll be breaking down charts through the exact zones where price will close above potential buys or close below for potential sells as well. So looking at the daily candle for Monday, the daily has been bearish and more likely will be closing bearish, forming daily resistance around 2003. Now here's the thing, we have the monthly candles coming to a close on Tuesday, so we only have one more daily candle to form for the monthly candle of October to close. And earlier in the week, last week, we've mentioned how it would be interesting to see how this monthly candle closes, because obviously price have been extremely bullish. We have price breaking above not only this monthly resistance, but also this monthly resistance formed in May 2023. Now, here's the thing. When you look at it, we have a rejection, multiple rejections on a high time frame, on a monthly time frame. So, in my opinion, I think we could easily see this monthly candle retracing and closing below this monthly resistance. And here's why, okay? So, we're just going to put a line to where this monthly resistance formed around 1987, let's say. And then when you drop down to the weekly has been extremely bullish. We haven't seen any sort of a retracement or a resistance for price to retrace to continue bullish. Now, what do we see within this weekly candle? The weekly candle hasn't really formed that much of a top wick and failed to retest this weekly resistance formed around 2018. And then when you look at the daily candle for Monday, the daily is basically forming a resistance. So if price is forming a resistance, now there is a probability for the following candle to respect this daily resistance, knowing we've had a strong bullish momentum continuation to the upside. So there is a higher probability for price to retrace. And then again, for price to retrace, price needs to respect this daily resistance. And price is not really that far from that monthly resistance formed around 1988. So there is a probability for the monthly candle to retrace and close below this monthly resistance. And now to break down the chart, and let's have a look again on the daily. Obviously the daily will be closing bearish. Dropping down to the 4-hour time frame, and what we can see here is we have the most recent 4-hour support formed around 1992 900. The most recent 4-hour resistance formed around 1999 700. Drop it down to the hourly time frame, and this becomes a really messy range on the hourly time frame, as we can see. Drop it down to the 5-minute time frame, zooming in, we have the same level of support. We can adjust the level of resistance to let's say 2800. And looking at the 15-minute time frame, ideally is to not pay attention to the 15-minute time frame, because obviously we have a really messy range on the 30-minute, on the hourly, so we need to focus on those time frames. So now to identify the no trade zone, and I would say personally, we could look for potential buys above 2800, for example, above this 4-hour resistance, yeah, and this is also the hourly resistance. And for potential sells, what we could do is we could wait for price to break and close. Let's have a look on the 5-minute time frame. Maybe wait for price to break and close below 1993 300, and this is going to be the no trade zone. And now to look for potential buys, and going back to the daily. So the first thing we can identify here is we have the daily resistance, or even actually the previous weekly high. Because if price is going to respect this low, then maybe we can anticipate for price to break above this previous weekly high and continuing bullish. Now, dropping down to the daily, we have a daily resistance around, let's say, 2006. Dropping down to the 4-hour time frame, now we have a 4-hour resistance around 2006 800. And then we have this range on the hourly. We have an hourly resistance around 2004 700. I would say probably better to stick to the high time frame. I know it looks really messy on the 5-minute time frame. We have this 5-minute resistance, so we could always manage risk once price tap into these levels. But the anticipation is to see price continuing, let's say maybe retesting this 4-hour resistance. So I'd say the first target for buys could potentially be 2006 800, targeting this 4-hour resistance. The second target for buys, now the second thing we can say here is we have this weekly resistance formed around 2016 700. Drop it down to the daily time frame and looking on the left, and what do we see? We have a daily resistance formed around 2014 600. Drop it down to the 4-hour time frame and looking on the left, and that's gonna be, let's have a look. Actually, no, we're gonna do this way. So we need to look for May, I believe. Yes. So now we have a 4-hour resistance. We have this strong 4-hour range from May 2023, the 15th of May. So I would stick to this daily resistance. I'd say the second target for buys could potentially be 2006-800, targeting, actually the second target for buys could potentially be 2014-600, targeting this daily resistance formed on the 16th of May 2023. And now to look for potential sells, and going back to the daily. So the first thing we can see, actually let's have a look on weekly. A monthly, what we can see, apart from this monthly resistance, actually let's have a look. So we have a monthly resistance formed in May 2023 at 1986-800. Dropping down to the weekly, we have a weekly rejection. Looking at the daily time frame, looking on the left, what do we see? Nothing really apart from ranges. Let's have a look on fallout time frame and see what we can see at the most recent price action. Now what we can see, we have this fallout previous resistance formed around 1986-900. Looking again, we have a range on the what we're going to do here is we can have the first target for sells at 1987-900, targeting this previous fallout resistance. The second target for sells, the thing is it looks really choppy on a daily, but when looking on the 4-hour time frame, we have this decent 4-hour support around 1979-900, almost 1980. And then when you drop down to the hourly time frame, now we have this range on the hourly. Now what I'm going to do is, yeah, that looks really messy. So what we're going to do here is we're going to adjust this line to 1982-900. So I'd say the second target for sells could potentially be 1982-900, targeting this previous 1-hour resistance.
Dominion Markets, your trading sanctuary.